Hey all, Tom Weller here from forexreviews.info. This is part 8 of the price action trader's mindset, and in this video what we're going to be going over is using Fibonacci as a tool in your trading arsenal. Basically, let's go over firstly what is Fibonacci and how and when should you actually basically even use it. Fibonacci is a tool that you should only ever, Fibonacci retracements is a tool that you should only ever be using in trending environments. And I highly encourage people to only ever use it in this environment. Using in any other sort of environment where it's just consolidating or it's a range bound market, do not use this tool. Okay. Now that's a really good question, because seriously, sometimes when the market is consolidating or ranging, it can sometimes seem like the market is still trending as well. So you really have to be careful on your decision making when it comes to that. But at the same time, if the market is trending heavily before, its chances are the market's going to keep trending in that direction. And so that's where we can use a Fibonacci tool if it's an if-then process, if we get some extra confluences, including the Fibonacci ratio. But firstly, I want to go over the two ratios that I like in particular, and these are the two high probability ratios, and every other ratio in between that or lower than that, I sort of tend to like to ignore. The two ratios I like are the 50% retracement and the 61.8% retracement. And every other ratio between that, like the 38.2, the 23.6, all those other ratios, I just like to tend to ignore, and I don't like to use them in my trading whatsoever. I find that the 50% and the 61.8 are, if they do work, are where the extremely high sellers get in the market or the extremely high buyers get in the market, depending on the trend, of course. Now let me draw an example of an average Fibonacci move, and just an average way the market moves when it's trending. Let's look at it from an uptrend perspective. The market will do this. It will often retrace about 50% of the move. All right, so this is for an uptrend example. It'll often come back up here. Then it'll do another 50% retracement move, and then it'll push higher once again. Okay, and then where it might do another final little 50% to 61.8% retracement move, and it'll push up once again, and then finally, usually, often, right, the market will change trends again and start ebbing lower. Not always, but this is often how the market moves in trending environments, right? And it's not necessarily going to be 3 moves. It could be 4, it could be 5. I'm just giving you an example of common waves. Now that I've done this and just shown you an average market move, and then it gets back to the low here, and then possibly it might bounce again and start repeating itself once again. All right, so now that I've done this, let's pull out the Fibonacci chart and let's just have a look at these ratios. All right, so as you can see, I've just drawn this is a nice 50 to 61% pullback. Let's go to the next one, and this is how you draw it. Here's between a 50 and a 61% pullback. And I'm just drawing these myself, these average moves, but this is often, in trending environments, this is often how Fibonacci moves. And if you're going to be trading the Fibonacci, this is another side note to go over. It works really well on time frames above the 1 hour, 4 hour, even daily. It tends to work the best, I find, from my own personal experience, on the higher time frames. Okay, and you will find that it will work on the lower time frame. Anything above 1 hour is what I'm meaning there. And 1 hour to me even seems like a low time frame often as well. And as you can see, we actually had 100% retracement, broke the 50% retracement area, and that sort of indicated to the traders that possibly we're getting a downtrend. Then when it retraced to just the 50, let's look at it. Let me just get rid of this one, and we'll look at it from the other perspective now, because we're up here. So now we pull it from there to there. As you can see, the 50 to 61.8, and it came back down again, like so. So I'm just showing you, like, this is without even looking at the chart. I'm just showing you the pattern. Okay, whoops. Okay, and you get my point. And so then here to here gives the average pattern retrace right here, and this could be a bit higher. The 50 to 61.8 as well, just giving you guys a heads up, is just a zone. Okay, it could just touch the 50%. It could break through the 61.8. Really, if you really want to know whether it's broken or not, or it's going further, if you get a candle close above there, it's only really a break. Okay, So what I mean by candle close is a candle body close. If you get a, like as an example, a market move that comes up to the 50 to 61.8 and it breaks right up and closes right up here up to the past the 78.6, chances are it's not a Fibonacci move, right? It's not. And the sellers in a downward move should get in around here. But like I said, you could get a strong move up to even the 78.6 and then a massive pin bar pushing the price back down, and then the price goes down. And so these are the sort of things to watch out for, right? And so that gives you an average little patterning there. And the cycle continues. Now that's what happens in a trending environment. Right now you can do this on the 1 hour, the 4 hour, the daily, as long as the market is trending. Okay? So now you're probably thinking to yourself, okay, well that's all great, well and said, but you know, I want to see it on the chart. And I'm sure all of you want to see on the chart now. So what I've done is I'm just pulled up the Australia US 4 hour. Now I haven't gone and looked for this beforehand. This is just it's always there, guys. So we're going to have a look. We'll have a look on the 4 hour Australian. Let's see if it's there. It's the Australian has been trending down for the last 4 or 5 days, actually a little bit longer. And so let's see if it's actually there on the chart. So first off, just let me get rid of all these lines. Okay, so take a mental note or pause it just to get an idea of the upward momentum and then the downward momentum using the 50-61.8% ratio retracement zone. If you want to pause it and have a look. All right, now I'll just get rid of all these lines so we can get rid of all the junk on the chart. And then I'll pull out the chart. So this is the 4 hour on the ADUS. And I know this pair has been trending, so it's good to look at a trending pair. It makes it easy. So let's just pull up the first few I can see right here. First of all, right, let's start from the beginning. Let's just start here. I'll pull it down to the low here. Now you can argue this is the low here or this is the low. It doesn't really matter. Like I said, these are zones. Like now, what I'm going to do is I'm going to insert the shape right here. Okay, because this is the 50 to 61.8. This is the zone we like, right? Now, you can also, let's do this one beforehand. Let's see if it lines up. And like I said, when the trend is first changing, it sometimes does not pull back exactly as far as what you'd hoped. So where did this one pull back to? All right. So now that we know that this one worked, this was a 50 to 61.8 on the downward move. Okay, so let me get rid of that one. Now let's see this one. This is the move to the bottom. It starts to pull back. Almost gets the 50% retracement, but then it didn't. It came back down. Now, so that sometimes happens. They do happen a lot, but you know, I prefer the 50 to 61.8. It just seems to work the best when it's, you know, for risk and, you know, that retracement period. You know, it's often sometimes you might find in a really, really strong and trending environment, you might get a 38.6 or something like that. Like I said, you're also looking for extra confluence. So let's look at this area in particular, and let's actually zoom in a bit. So let's have a look at this one, because this one worked out perfectly. What I'll do is I'll draw it in once more. So you see this is the recent high, and this is the recent low. Now, how do I know this? Well, price came down and it bounced up decently from here. So this is the sort of thing you draw in as the price is coming up, and you sort of think to yourself, wait a second, it's a downtrend's moving. If it's going to turn around, where do I want to know where it's turning around? And we got a movement right here. As soon as we got into this zone, we started finding weakness, right? So let's look at candles here that we could have taken. And how could you manage this trade as well if you were trading this? First of all, we got a bit of a bearish price action right here, which touched exactly the 50%. So that was giving us an indication that, yes, possibly this could be a turnaround zone. Right, it could have also been an opportunity. Now, in this situation, when you're trading Fibonacci and you're trading it on the trend and you're looking at the chart, you have two options, right? First of all, you can just give the market a little bit of room. Like I said, you can, if you're trading using Fibonacci and the price action, you have two options. Well, you're looking for an extra confluence, right? So we've got a candle here. So what you could do is you could use the candle itself as your risk. Yeah, nice way of having a tight risk, a good risk reward. However, the market can sometimes come back up and tap you out. On a second way of doing it, which is the way I prefer, right, is if I'm going to see weakness here, you can put your stop above. Now this is the second way. I'm going to show you a third way, right? You put your stop above the 78.6 in the trending environment. right? So if you get the bearish price action, which gives you the second confluence, you look above the 78.6, right? On a third note, and a way of looking at it, and what a lot of trend traders do, is they place their stop above the previous high, right? Which means that the market would have to be changing trends. Maybe they'd give it a little bit of room, right? And each of them are valid. You know, one's lower risk, which means, yeah, you may get more stop outs, but you're going to get more reward when it's better reward. One is giving you a little bit of room based off Fibonacci, which is 78, just above the 78.6 zone. And the last one, which is like the last step before 100% retrace. And then the last step is putting your stop above the previous high. Okay, so I think we're all following along there. So let's go to the next one and have a look at it in detail once again, okay? And like I said, you can use this on the daily, you can use it with all different forms of price action. Yeah, so anyway, let's have a look at the next setup and just see what happened there. So let's draw in the fib, okay? Okay, so this is the recent bottom before the price started meandering higher. And what happened when we got to the 50 to 61.8 zone. So let me get rid of this first because we've gone over that signal now. And you see, these don't happen all the time. So like I said, like trading is a process, guys, and you have to be patient before you get to the next zone, right? And you know, this is a bearish trend, so you're waiting for a decent pullback. Now you see how it did respect the 38.2 to begin with, and it actually dipped down, right, in this trending environment. So some sellers were here. However, the price pulled back up to the 50 zone where we started getting some bearish price action. Your stop could either be above here, above the previous high, right, or even above the candle, yeah, right. In some cases, that's great. Like as an example, the 50 to 61, which is where I like to see the price action, exactly in that zone, here's a perfect example of a nice bearish price action right here, right? So let's continue down. And so this is an important aspect to understand when you're going over and getting the price action trader's mindset. It is important to understand that when the market is trending, right, is the Fibonacci of any use? Sometimes the Fibonacci is absolutely useless and it doesn't work because the market is not trending. It's an if-then tool. So when the market is trending, then you can see if it is working with the trending environment. And when it aligns with your, you know, your price action, your other confluence such as support and resistance, or whatever other way you're using for extra confluence. I highly recommend not using indicators though, but whatever other way you're using for extra confluence, then it can give a higher probability trade. Okay, so here's an example of this last dip. Now, as you can see, we've sort of had a bit of a pushback up here, right? So let's have a look at this. Let's draw the fib, say from this recent high down to this recent low. Isn't this interesting? We're actually in the 50 to 61.8 area right now. You could even argue that this could have been the bottom, but you see how we made a new low, so we have to use that. Or you could even pull this down to here, depending on how you trade the trend, and see it's testing the 78.6 right now. So this could be a change. If it breaks up much higher, could be going into a bit of an upward dip where the price goes up, pulls back to, you know, the 50 to 61.8, or pulls back to the previous structure, depending on how you trade the trend, right? And there could be a shift going on here, right? That's an interesting note because, you know, this is what I was trying to say to you is you don't want to trade Fibonacci blindly, right? You're looking for the 50 to 61.8 to show some nice bearish price action. Now let's have a look at this recent move once again from this perspective. Now let's have a look. We did get into the 50% and we got some weakness, right? And in fact, we went all the way down to here. So even if you traded this, say you traded one of these bearish candles here between the 50 and 60, you can see that it did go high, right? But do you see this pop that came down that tested the low? That tested the low, like after these, you know, after this first bearish price action right here. I might zoom in one more time, guys, so you can see it in detail. Okay, so you know, come down here, formed a low, price pushed up higher than that low, comes up to the 50% retracement area, forms a bearish candle, right? Okay, which is right here. And price actually retraced down to low, which is 59 pips. It did actually initially drop 20 pips though. Okay. Like I said, these are guides, and they're guides for getting in on the trend. It does look like the trend is changing now, maybe. And how do we know when the trend is changing, guys? That might be like, let's go back to a previous reference of what I went over in part 3 of the price action traders mindset when I was going over trends, right? If you haven't watched that part, you should go back and watch it. Right, in part 3, we went over trends change when the previous high is broken and price closes above with the body. So when price does this, that's usually what we like to see to know if there's a change in trend. And then price will usually come back and then push off that break and go higher. And then we can see we can look at the Fibonacci moves if using Fibonacci in that situation as well. Like I said, Fibonacci doesn't always work. It's a tool, and it's for certain trending environments. But when it's used right, and you can see that the market is trending, like we saw recently with the Australian, it gave a couple of opportunities that people could have taken with Fibonacci once it was identified. Because I'm just showing you a small part of the market. I'm showing you a small part that once the trend was identified. Yeah, and you can see that those areas, you know, once again, like I said, like with the if-then situation, right? And so that's what makes Fibonacci a powerful tool. And you can use it in a trending environment when price is going up, when it's uptrending, when price is going down. Yeah. So I'll keep going a bit longer with this video. I'll actually let's have a quick look at another pair, and we can just see if we can see, first off, we'll identify if it's been trending, and then we'll jump back, or we'll jump back to a lower time frame like the 4 hour and just see if there's some Fibonacci moves there. Okay, so let's do that. Okay, so I'm on the GBP New Zealand, and as you can see, price has really started selling off, right? Okay, recently. So let's look at it from the broken sell-off perspective. Okay, I'm on the daily chart. First of all, we had a penetration of this previous strong resistance zone. Then the price broke below the initial daily candle, which indicated a possible break of the low and a possible trend change. So now I'm dropping down to the 4 hour, right? And let's do the initial break of the low. By the way, if you're wondering, this is the initial break of the low, indicating a possible change in trend. So let's draw this in. And let me just get rid of everything on the chart other than the Fibonacci, because otherwise it's just going to be really confusing. Okay, so like I said, between the 50% and the 61.8 is my preferred Fibonacci move once I can identify that a trend has been broken. I wait for a pullback to that zone and some bearish price action if I want to get in on the trend, right? Okay, and if I believe the market is trending. Like I said, it's an if-then situation. If I believe it's ranging, I don't use a fib tool at all. And you should not use it either, because seriously, it just won't work properly. Okay, it's a tool, like I keep saying. However, let's look at this, right? Now, let's ignore this section here, not this bit. Let me draw it across, because we're waiting for a low. Now, we had a low here, right? And what I mean by low is, you can see we had a strong, significant candle pushing up, going higher, and testing this previous high right here. Right? We can all see that. So this is an area we can put our Fibonacci, right? Because it pushed up quite high. So we can call this a low. Now this was the high. And what you can see now is it broke past the 23.6, the 38.2, and the 50%. Yeah, and then when it got to the 50%, what happened? Between the 50 and 61.8 is it found weakness there. That means that this is where all the sellers were placing their heavy orders. The institutions, the big traders, maybe the banks, you know? And so let's align this now with price action, right? So let's have a look at some nice price action here. We got an okay bit of price action here, but not very convincing, yeah? Bit better here. We had a really good one right here. Wouldn't you agree, guys? You know, quite solid, quite strong, telling us that there's something going on in the market right here. And then we get another, if you didn't manage to get this one, another nice bit of price action right here. Now this one did not touch the 50%, so it's not as valid as the first one. However, we did just previously get a touch of the 50%. So we have a bias, right? By looking at this, we have a bias. So let's look at this first initial nice bit of price action, and let's just see how far the market's gone. It's gone down 100 and, well, let's look for it as far as it's gone so far, because the market is literally trending right now. So let's say you got in after this nice bit of bearish price action here at the bottom or the tip. It doesn't really matter. It depends on your entry rules for trading, okay? It could easily get around 160 pips, if not more, or maybe a little bit less on this move, okay? So you'd be at a bit of a one-to-one sort of situation and risk reward right at the moment. Okay, so there's some examples of using Fibonacci and some random examples where I just pulled up on the chart, just pulled up two pairs, the Australia US and the GBP New Zealand, two completely different pairs, and just showing you what to look for when you believe a market is literally trending. Like I said, as a side note and a disclaimer, I want to say that Fibonacci does not work in all environments. Once again, it works in trending environments. However, when it does work and aligns with price action, it can be very effective. Okay, well, thanks guys. I hope you've enjoyed this video. If you have appreciated this series so far, feel free. Just give us a quick like. Hit the like button just to let me know that you're appreciating this series. And part 9 will be coming out maybe the next week or so. Okay. And so to stay tuned to this series, just make sure to subscribe or add your name and email at forexreviews.info. Once again, guys, and thanks for watching. Thanks for the support, and happy trading.